I'd like to thank you for taking a few moments to learn about car wash loans and some of the reasons why these loans are declined. One of the main reasons is insufficient equity, and that simply represents how much money you have into the deal. If people have minimal money into a transaction, it's only logical that they're going to be less committed to this transaction, and it'll be a lot easier for them to walk away from. Not that many years ago, people could walk in with 5 or 10% into the deal and get financing, and a lot of times that 5 or 10% could have been from a home equity loan or from a loan that they had borrowed from friends and relatives. That just simply doesn't happen today. Some of the solutions for this is to find an equity partner. You can have an equity partner that could be equal partners, or you could have someone that owns less than 20% bring in equity and not necessarily have to qualify for the loan at the same time. The second possible strategy is to have the seller hold a second on the transaction, although you as the borrower will still need to bring in the predominant amount of capital into the deal. Frequently, because of this, the seller might be asked to be put on standby, and what that means is they might not be able to receive payments for the first year or two. The next reason why people are declined from these type of loans are insufficient direct industry experience. It might be good if you've ran apartments, it might be good if you've run a convenience store, but not all of these things transferred to another industry. Some possible solutions to this is to find someone with formal industry experience, or perhaps even the manager that's there, and put them under a formal manager agreement. You can also bring in a partner, someone who has the direct industry experience, and give them a small percentage of ownership in the company. If you make it less than 20%, they typically will not have to qualify as a borrower. These are the number 2 reasons for default on loans in general, whether it's conventional or SBA financing. Insufficient money into the deal, insufficient experience. The next reason is collateral, and this is more often for business-only transactions than it is for real estate transactions. If you're purchasing a business-only transaction, you're purchasing the goodwill and some equipment. Most of the time there's going to be insufficient collateral for this. Depending upon if you're trying to get SBA or conventional financing, SBA will always look for additional collateral and take that collateral if it is available, meaning if you have equity in your home, if you have CDs, stocks, whatever, they will look for that to collateralize this loan. If you have additional collateral, that would be the logical thing to do, is to offer that as additional collateral. The next reason, which for car washes is very common, is the fact that they don't cash flow. And when I say that, that means that they do not verifiably cash flow. This is a cash business, and a lot of people underreport. So when it comes to qualifying for loans, what they show on their returns will be insufficient cash flow for a loan. A possible solution to this is a seller held second, and again they might be required to be on standby and not receive any payments for the first year or two. A better solution is to negotiate a lower sales price, and that helps you out, and then that makes it more likely that you'll get the financing. Another reason is poor credit. Now, poor credit isn't all created equal. Some people have an 800 credit score with $50,000 or $100,000 worth of credit card debt, and you have some people with a 680 that for some reason inexplicably have a lower rating, a lower score, and yet you don't see any particular reason why. As an underwriter would rather have someone with a 680 with no personal credit card debt and no lates than someone with an 800 score with $50,000 to $100,000 worth of credit card debt. Again, the best situation if someone had an 800 credit score and no personal credit card debt and no installment loans. But again, this is one of the main reasons why these loans are negotiated. Another possible solution is to do a quick credit rescore. There are companies that are out that do credit rescores and can be done in a very short period of time. So regardless if you are looking to finance a self-service car wash facility, a rollover, or a tunnel wash, these are some of the main reasons that loans are declined and some of the possible solutions that you can do to make sure that you get your loan approved. Thank you for taking a moment to view this. You can view our website at www.carwashloansinfo.com, or you can contact us at the number or the email address above. Thank you.